Tax-deducted source, TDS. Every business, whether a startup or an existing company, must incur some expenses or make payments to its parties irrespective of its size and scale. Thus, TDS provisions apply to all types and sizes of businesses. It applies in the same or similar way to a proprietor, firm, LLP, or a company registered under the Companies Act, 2013. For small payments, the provision of TDS does not apply until it crosses a threshold limit as prescribed. It must be noted that the TDS is applicable only on the specified payment and after it reaches the threshold limit. The most common types of expenses on which TDS is applicable are provided hereunder. Key points of TDS deduction and payment. Step 1. Payment of TDS deducted.
The tax deducted at source, TDS, while making payment to parties for qualified expenses must be deposited before the 7th of next month. For example, the TDS deducted in November 2017 is payable on or before 7th of December 2017. The Challan number for making a TDS deposit is 281.
While making a TDS payment, care must be exercised while selecting the appropriate section/nature of the payment. Step 2. The consequence of non-compliance. The non-compliance with TDS provisions is a grave offence and is punishable under Section 271(c) of the Income Tax Act 1961, wherein the minimum penalty is 10,000, which can go up to 1 lakh rupees. Further, Section 276(b) applies to all such cases where a willful default is established. In all those cases, the punishment is 3 years rigorous imprisonment, which can go up to 7 years. Step 3. Interest on non-payment of TDS. The TDS deducted by a person needs to be deposited within the 7th day of the next month. Any failure or delay in depositing the TDS is punishable under Section 271(c) or / and Section 276(b). The defaulter is further liable to pay interest on delayed payment at the rate of 1.5% per month or part thereof. There is no provision in law where the interest can be waived, hence the assessors should be very careful. Step 4. Filing of TDS return. After making the payment of TDS to the income tax, the taxpayer is required to file a quarterly return where the TDS deposited is mapped against the PAN of the person from which TDS was deducted. The TDS return is filed within the 30th of the month succeeding the quarter. For example, the first quarter ends on 30th June, hence the TDS return must be submitted before 30th July. Step 5. Interest on non-deduction of TDS. When a person, while making a payment for which he ought to have deducted TDS, fails in deducting TDS or deducts an amount less than the required amount, in all such cases, the detector is liable to pay an interest at 1% per month or part of the month, till the date on which TDS is deducted. Hence, a business person must be prudent while making payments to parties and ensure that TDS is deducted. Step 6. Other consequences of default on TDS. The expenses on which TDS was required to be deducted shall be disallowed as an expense under Section 40A while computing the total taxable income. To understand it quickly, let's take an example of a business where the income is 10 lakhs and the expense is also 10 lakhs. then effectively there shall be zero income tax. However, if the TDS is not deducted, then the tax shall be 3 lakhs, 30% of 10 lakh. For more information, you can visit our website www.gstnitbuddies.com. You can visit or call us at 722-990-3363.